Welcome back. In this week's Global Economic Week Ahead, all eyes on monetary policy moves from global central banks, as well as industrial and retail sales data prints, particularly from the US and China. And joining us for a look ahead is Joshua Mahony, Chief Market Analyst at Scope Markets. Thank you so much for your time, Joshua. Before we get to China, everything is about China today, this week. Let's start off with the Fed. Of course, a big risk event in global monetary policy. That meeting being concluded on Wednesday, where we will be hearing from Jerome Powell that night. It looks like there's almost 100% interest rate cut expectation. What should we be looking out for in that commentary?
Yeah, exactly. Finally, we see Donald Trump getting his way. He's done everything to try and get a rate cut ahead of this meeting. It didn't happen. Jerome Powell's still in his position, and it looks like he's actually going to cut rates. The reason for it, of course, is weakness in the jobs market. Inflation on the rise. I mean, we saw 0.4% on the inflation metric last week, but we saw a 4-year high for the jobless claims. It builds on a weakness we've seen in terms of payrolls and the like. So that's forcing the hand of the Fed. By and large, markets expecting 100% chance of a rate cut. The expectation of a 50 basis point cut essentially eradicated with that higher inflation gauge. So 25 basis points likely. Markets pricing a rate cut at the following 2 meetings as well. Yeah. And so where's the volatility going to happen? Well, do they spell a faster pace for next year with the dot plot? Do we see significant adjustments in terms of their projections for next year? Potentially, but certainly markets appear to be in relatively buoyant mood in anticipation of them essentially with their first rate cut of the year.
Yeah, well, talking about Trump getting his way, I don't know if what I've seen in the news is a signal of that when it comes to TikTok, because we know that TikTok has been included in the talks between China and the US and Spain. And I saw a headline actually a few hours ago implying that Trump had said that there's a deal that has been reached on TikTok ahead of that deadline and that he'll be speaking to Xi Jinping on Friday. I don't know if anything concrete has come out of that.
No, there's no specific details around this. I mean, it's interesting. So these negotiations kick-started yesterday in Madrid. They happened today, and now they've essentially moved on to tomorrow now. So there's nothing more that should come out of it. But there has, of course, been this announcement that they apparently have had a breakthrough on the TikTok deal. It's essentially the idea that it's going into US ownership, but it would just be the US operation. Supposedly this is a security concern, but ultimately, from my perspective, the US loves to have a monopoly on all the big tech companies. So the ability to get their fingers into a very successful one in the form of TikTok certainly does appeal to Donald Trump. So exactly what the financials are, that remains to be seen, but it's one part of a number of different deals that they're probably going to try and put together within these discussions. So this is something the US have achieved. They're probably going to have to give something away in the opposite direction.
Yeah. Well, talking about tech, I guess let's talk about NVIDIA, and I guess in kind of 2 questions, because we do have the tech bosses going with Trump to the UK on a state visit. So they're part of that US delegation. Firstly, what can we expect from that? I'm going to come back to the China issue and that competition law challenge that they might have there. So let's actually start off with what is expected from that state visit in the UK, and particularly then with the inclusion of the tech bosses.
Yeah, I mean, this is relatively unprecedented. Generally, for a second term, a president doesn't get the state visit like this. But when we saw Keir Starmer head over to the US, that first meeting, he provided that letter from King Charles saying he wants to invite him over for a second one. And, you know, Donald Trump loves a little bit of pomp. And so he's heading over. Day one's probably going to be all about that. It's going to be about meeting the king and the photo ops that brings. But day 2 is all around business. And he's got the likes of the CEOs from NVIDIA, from Apple and OpenAI. Quite what the announcements might be remains to be seen. But of course, just those names do allude to an idea that there's going to be a big focus on potential investments on the tech side of things. Of course, there's been some sort of outcry about freedom of speech, about potential digital sales taxes. And so the US will essentially want to open up the UK a little bit more and minimize any clampdown. But certainly from a UK perspective, the government and particularly Keir Starmer has been under pressure after the crisis around Peter Mandelson, who was the ambassador to the US, got linked to Jeffrey Epstein. And so he would like a good news story, and it looks like it's going to come in the form of potential investments from big tech.
Well, something that is not a good news story, and I'm thinking maybe could then complicate the relationship between the US and China even more, is the fact that China has come out with preliminary results on a probe saying that they found that NVIDIA violated competition law. Just contextualize that for us.
Well, this is specifically to do with the deal that they struck back in 2020 for a company called Mellanox Technologies. The investigation's been ongoing for a while. Supposedly, they've undertaken sort of monopolistic activities. So look, ultimately, this is not a coincidence in terms of the timing of this announcement. It comes at a time where there's this sort of tit for tat. They're trying to bargain over different deals. You know, we'll give you a bit of TikTok. You can, also deal with the fact that we're threatening the biggest company in the stock market, and we saw the stock drop at the open off the back of that announcement. So I think this is something that by and large is just going to be sort of woven into these negotiations as the Chinese try to get potential concessions over the US, whether it comes to tariffs, whether it comes to technology transfers, and the US are trying to get something from their side. So I think it all really sort of wraps up into that bigger picture, really.
All right. Well, let's take a look at the picture, the economic picture in the UK. Not very good news that we have gotten ahead of this data-heavy week and monetary policy-heavy week in the UK. Just last week, we got the latest GDP figures that growth stalled. When was it? In July, if I remember correctly. And now we have unemployment figures and inflation figures coming out ahead of the Bank of England's latest monetary policy decision. Just talk to me about the state of the UK economy and what these numbers could reveal, but also then the options that gives the Bank of England.
Yeah, I mean, I guess when you're in the UK, you're hit with constant news about how negative things are in terms of the direction of the economy right now. Not sure what the perception is from outside of the UK, but certainly the latest growth figure wasn't great. It was flat, essentially. But prior to that, we did see a 0.4 reading. So the prior 3 months, if you wrap it up on average, it was 0.2. Not necessarily the end of the world. Certainly there's a fear around the possibility, or not possibility, we're going to have to see higher taxes because there's a black hole in the public finances that needs to be filled. So there's fears around that and what that might do to the economy. And at the same time, the Bank of England can't really help out because inflation is the highest in the G7. So we've got an inflation problem that comes out this week. We've got likes of the jobs market, which unemployment has been on the rise. We've got retail sales. So will that lift things a little bit? Who knows? Certainly the UK economy is in trouble, and we need the Bank of England to step in. Their hands appear to be tied, but we could see them potentially ease off the gas when it comes to QT, so quantitative tightening or the selling off of their bond holdings. Maybe they slow down on that front, but really it's difficult. Both the government and the central bank can't really help things at the moment with the inflation picture as it is.
Yeah, and I know that this also does make the road bumpy as you're heading to that autumn budget statement. So it's going to be very interesting to see how policymakers deal with all the challenges in the economy. Well, thank you so much for your time and for your insights on what we can expect in the week ahead. Joshua, really appreciate your time. That was Joshua Mahony, Chief Market Analyst at Scope Markets, with the Global Economic Week ahead.